Hey guys, my name is Adam from Dodjit.com and this is your video briefing for the 26th of July. Now in this video what I want to do is a little bit of intermarket analysis. We're going to go over a few different charts. We're going to show you what we're looking at, and I don't know if you all recall, we've already been pretty bullish on this market for a while. Even back here around this area we were still bullish, and also when we had this retracement we were stating that it was probably going to be temporary. We were going to probably head higher. As things are starting to pick up in the economy, we can see it on various sectors that they're starting to show slight improvement. Now, let's jump to the first chart. This is the S&P 500 chart. Look at this breakout. This was absolutely amazing. We completely broke out of our range. We were talking about this range for quite a while. We received support on our 200-day moving average. We climbed higher. We broke our secondary trend resistance line roughly around here. We could just continued higher. Now on Wednesday, look at this candle. Let's just move this for a second. Let's see if we can move this. Let's just move this up here for a second. Look at this candle. We received this hanging man candlestick around here, and then we received this dodgy light candlestick around here. Now we were expecting a retracement. I was expecting a retracement, and basically what I was thinking is probably we were going to retrace slightly lower and then head back to breakout. And look what happened on Thursday. This market just soared higher. We broke our resistance level. Let's just bring this back down. We broke our resistance level by around 2.5%, 3%, something like that. We just soared higher, and then on Friday as well. And during Friday's session, we even received an intraday retracement, but the markets just climbed higher. They closed the day with positive gains. Not really impressive, but if you look at the overall weekly gain, really nice. We're talking about 4.5%, 4.7%, something like that. So where are we heading now? Well, basically, things are looking good. We've got nice volume around here, even though that Friday's volume wasn't that impressive. Thursday's was really, really great. We are looking for a higher market, but we are going to need to receive a follow through. And the reason for this is because breakouts like this tend to turn into a fake out. So what I do want to see is I want to see a continuation pattern Monday, Tuesday, Wednesday. Now the only problem is that we've got GDP data coming out on Friday. So I don't know, we could receive a little bit of consolidation. What I don't want to receive is a big red candle. This is just going to bring us back into range. If we're going to receive that, so then obviously if you've got bullish positions at the moment, if you're bullish on this market, so then you want to think about toning it down a little bit, because we could head back into consolidation. So what we are looking for at the moment is something like this, one candle going up and then another one going roughly higher like that. That's something that we are looking for at the moment, a type of formation that's just going to continue through. Alright, let's just flip over to the next chart, and this is something that I want to show you. Now, this chart that I'm showing you now, this is not a chart that we normally show on the analysis, on the weekly videos, but what I do want to just show you is this line, and this line basically is the New York Stock Exchange Advanced Decline line. Now, what it basically means is that this indicator, it's a type of indicator that you use to gauge the market, to see the relative strength of the trends. And basically what we normally do is we like to confirm, because if you just think about it, the name Advanced Decline Line basically means that if the line is heading higher, then it normally indicates that the current trend is strong and that the market is heading in a healthy direction. Now, how people also like to use this is like this, that let's say for instance the market was heading higher but the advanced decline line was heading lower. So then that normally tends to signal to us that there's going to be a market correction, or there's something not healthy in the current trend. Now what I want to show you guys is like this. We've just seen the S&P 500 chart. We can see that it's really heading higher. We've just broken out of our resistance level, and look at the advanced decline line. We just plot a trend line on this for a second. We can see that we are really heading higher, and there seems to be quite a lot of change in sentiment on this. Look at this. We received this double bottom around here. We have headed higher. This was all throughout March, April, May, and look at this. We've now broken higher, which coincides with our break on the S&P 500. It does look good. Yet again, I don't want to see us in this false break scenario. That will be really, really disappointing. And the reason for that is because I'm going to just flip over now to a few different currency pairs, and I want to show you also that we were looking at some breakouts that haven't occurred. So let's just look at a few additional charts. Alright, so the next chart is the euro against the US dollar, and the reason why I'm bringing up these currency pairs is because we were expecting, actually, as the S&P 500 broke higher, we were expecting to see also some breakouts on this, on the euro US dollar, on the Australian US dollar, and we haven't really received that. So that basically is telling us that be careful at the moment. That's what it's telling us, because we've had this strong correlation between the currency pairs and the S&P 500, and they haven't broken out. We could receive it on Monday, Tuesday. We've got a lot of economic data coming out. You can see, yet again, I'm going to just flip through these different pairs. We've got here our trend line and our resistance level. We were hoping for a breakout roughly around this area around here. We didn't receive it. S&P 500 is climbing higher, but we're not receiving a breakout on these different currency pairs, meaning that the risk for appetite is coming back into the market, but people are not that confident at the moment. So this is just the euro against the US dollar. If we just flip over to the pound against the dollar, we've got the same type of formation, trend line, support and resistance levels. Look at this, looks exactly the same. And yet again, look, we're not breaking out, and Friday session was even down. The US dollar strengthened a little bit. If you look at Friday's session, I tend to look at Friday's session in order to try to figure out how Monday's session is going to open. And look at this, the dollar did increase against the pound. Also on the euro US dollar, it wasn't highly impressive. So what it basically means is that we have received a breakout. We're going to have to receive a breakout, in my opinion, on a global scale for this market to really start to rally higher. We've got the techs that are still leading us higher. Things do look good. Just make sure when you're not going to get caught out on in the false break. We've got GDP results coming out on Friday. We're trying to get another video posted this week. Hope you enjoyed the video. My name is Adam from Dodjit.com.